Namaskar and a very good morning. Welcome to the audiocast from Kotak Securities. I'm your host and guide, Anindya Bannerjee. As global cues are pretty mixed. एक तरफ Asian equities are in the green, but Dow futures and European equity futures are down. Dollar index is relatively flat since last evening. Oil prices have bounced a little. US bond yields have pulled back from 309 to 289. But the good point is that last 3-4 दिन से FPI flows have turned positive. So this is something we need to watch because agar FPI flows is going to become positive for India, it's going to be a major supporting factor for the Indian rupee because the bigger trends in the USD/INR is created by the carry trade and the FPI flows, and which was consistently negative for the past few months. So this is something we need to watch very carefully, the FPI flows, and that could be the reason why 80 per dollar rupee is unable to stick. Every time it gets above 80, it gets sold. It's just not the RBI intervention because RBI has been selling quite aggressively since much lower levels. So I think it could be the flows. FPI could be a little bit of corporate flows, a bit of exporter hedging. All these things may be the reason why it is unable to stick above 80. But अगर price action पे ध्यान दे तो it is still bullish. And chart structure indicates जब तक 79-60-70 के ऊपर futures है तब तक we have to assume that the trend is upward, and 80-10 80-20 के ऊपर it is unable to stick. So this is the zone of resistance. 80-10 80-20 or 79-60 79-70 is the support zone. So any sharp pullback can be an opportunity to go long with a stop loss below 79-60 and 80-10-20 के आसपास. Be careful with your longs. Exit if you get an opportunity. Now, if it starts to trade well above 80-20, which will only happen if there are change in the global market sentiment decisively to negative, or a major depreciation in something like a Chinese yuan, then we have to, of course, reassess this situation. But as of now, as I said, 79-60, 80-20 is a broad range on the July futures. Now coming to the crosses, Euro-INR was the center of attraction kal because of the European Central Bank meeting. They hiked rates by 50 basis points, which was on the hawkish side. At the same time, they hinted more hikes are coming from in September as well. But two things or 2 pointers from the ECB chief which poured a cold water over the euro dollar. One was the anti-fragmentation tool, or the program which they have announced to buy bonds of the peripheral countries to prevent their yields from rising. That program has strict conditionality, and because of that strict conditionality, some of the countries may not qualify, and that's the reason why euro was smacked hard. And at the same time, the ECB chief said that though we have hiked rates by 50 basis points, but our final rates or the terminal rates will stay the same. It is simply that we are front loading the hikes. Now this is a second factor which also pushed it down, because when US was hiking rates, not only did they hike at a faster pace, but every time the expectation on where the final rates of Fed will be increased from 3 to all the way up to 4. But that's not the case happening with the European Central Bank, which is obviously the case because Europe or the Eurozone economy is a far worse shape than the American economy. So Euro-INR could be under pressure today, or aaj GBP will be in focus because the retail sales numbers and the flash PMI will be out. If the global risk sentiment turns negative by the time Europe starts trading, and these two data point comes weak, then GBPINR could get sold heavily. So keep an eye on GBPINR today for trading. So that's it, folks. This is Anindya Bannerjee signing off. A fantastic day ahead.